What's up, guys? Core Currency here, and I wanted to explain a trade that I took this morning. I gave out in the Discord, and I lost. So this is our first losing day in 2 weeks, and losses happen. Been having a good win rate as of late. And as I explained to everybody, you do not need above 70% win rate to be consistently profitable, as long as you maintain strict protocol, strict risk management protocol, and good risk rewards. You'll maintain consistency. But anyway, as most of you guys already know, I trade the smart money concepts, and as you see right here, we were in a 1 to 7 good risk reward, 18 pip stop loss. So, an ideal stop loss, but we were stopped out, and a good thing we were stopped out right away. But any SMC trader, they know that the past few weeks have been really choppy. All right, so instead of price going in a definitive direction, it'll go up 100 pips, come all the way back down, which it did here, go back up, and now it's, just up and down, very rangy, not the best market for smart money concepts. But let's get into it. To show you why I took this trade, I will go into the replay mode. So I will show you this, right? So let's start here, 7 o'clock. All right, and I'm gonna go down to the lower time frames. Let's go to the 5 minute. Okay, the lower time frames, and one of my most frequently asked questions are, what time frame do you use? And a lot of people say, they ask, does the liquidity grab happen on all time frames? So the liquidity grab is a matter of fact, right? It's either happening or it doesn't happen. Whether it's, if it's happening, say at 8 o'clock Eastern Standard Time, you're gonna see it on the 1 minute, the 5 minute, the 1 hour, the 30 minute, the daily. You're gonna see it because it's at a certain price. Okay, so these grabs are happening at like highs and lows, major pivot points such as this, right? So price is right here. All right, you have price right here at this point. So if you're looking for it to take out buy side liquidity, you're looking for this is an area here, and then the next area would be here, even more so because it's a double top, even more attractive. Okay, if it's going for sell side liquidity, it could take out, this area here, this area here, this area here, all the way down to this area here. Okay, these are these key level pivot points. Okay, but mostly attractive are these double tops, just as a lot of retail traders go after double tops, double bottoms. Okay, areas like that, you'll find that they're very attractive for the algorithm. All right, because these trading, institutional trading is very algorithmic. All right, so that's my take on time frames. All right, but I know you guys are gonna still ask the question. But anyway, so we are in replay mode, and I'm gonna move forward a little bit to show you why I was going for sales. All right. So right here, in case you were wondering, this area here I drew is the new week opening gap. All right. This is something new that Michael Hudson goes over. That's why you really didn't hear me talk about it a lot. I was just testing it out. It's basically the previous week's Friday close, and the opening of the difference between, sorry, last week's Friday close to this week's Sunday open. Okay, so that's what this area is here. He says they use it as another sign of fair value gap. So as it was tapping into that, I was expecting a sell off, but I wanted to see what price was doing further. So okay, you see the sweep on liquidity, at least in my case. Okay. And then we have, at least what I see, a break of structure. That's why you have this fair value gap here that I drew. Okay. So and look, even though I lost, I was true to my setup. All right. So you have the sweep of liquidity here. All right, comes down and breaks structure here, because this would be, the higher lows. But now it breaks structure here, and that impulsive move that breaks structure creates a fair value gap. All right, being that it's a bearish fair value gap, you're looking at the bottom wick of the first candle to the top of the wick of the third candle. So one, two, three. It's a three candle series. Bottom of this wick to the top of this wick. Okay. So I am looking for it to come back into this zone, and then my ideal trade would be when it comes back here. Hopefully at least filling 50% of the gap, and then I will put my stop loss at the high here. Okay. But as usual, I'm either making breakfast or for my son, or in this case, I just woke up a little late. So I missed the entry. All right. So I was patient just to see if I would get another entry, in which I did. Okay, price came all the way back up here. I got into it right here. Okay. And I was anticipating to go down. But around market open, 9:30, we get a 100 pip move to the upside. All right. So I'm showing you where I went wrong. Well, I'm not gonna say I went wrong. Yes, the trade didn't go in my favor, but I stayed true to my setup. All right. It's a 100 pip move. All right. From 33,810 to 33,917. All right. 100 pip move, you know. Unfortunately, we was on the wrong side of that. Okay. But now if I look at it on the other, because I went back and looked at it, because I looked at, buy side liquidity getting taken out, then a break of structure. All right. So, I was right with the setup. But now you also have buy side liquidity being taken out here. So you have lower low, lower high. Okay, so technically, as it's doing a downtrend, it's constantly sweeping liquidity from the previous low. All right, so this is a lower low that swept this liquidity. This is a lower low that swept this liquidity. Okay, and then instead of another lower high, it breaks structure right here. Okay, going over that new week open gap. Okay, but let's not even get into that. But it breaks structure to the upside after sweeping liquidity right here. I'll draw a line here. All right. Boom. Just so you understand, man. I talk about the same thing in every video. It's really just to show you guys that it's not like a bunch. Yes, I've been trading for a long time, over 10 years, but it's just during different market environments, different market settings, you're still looking for the same setup. Break a structure. I'm sorry, sweep liquidity, followed by a break of structure, and then a pullback into the fair value gap or order block. Same thing, right? Every day, every day. If you don't see it, you don't trade. All right. But anyway, we have that sweep of liquidity here, sweep of liquidity. All right. And then a break of structure on the other side. Okay. Break of structure right here. That's already there by the new week open gap. All right. And now you have a let's draw the fair value gap. Hopefully you guys see it. All right, but now this is the bullish fair value gap because price is going up. So this candle, the top of the wick of the first candle to the bottom of the last candle. All right. Let's zoom in a little here just so you see it. All right. Look closely. All right. Right here. This is the first candle. Two, this is the third candle. All right. Very important. You want to learn because listen, fair value gaps are all over the place. They're all over the place. All right. So we're not looking at just any fair value gap. We're looking at the fair value gap that broke structure right after the liquidity sweep. All right. It's like a sequence. Liquidity sweep is number one. Um, Break of structure is number two. That creates the fair value gap. And then a price dipping back into the fair value gap. Okay. So and as I always say, note that say structure got broken here. If you got in this trade right here for a buy, you would be good. Yes, you would be good. But we wait for price to dip back into the fair value gap so we have a better risk to reward, right? Just like in my case, because I lost today, but at least I lost only, it was a 18 pip loss, okay, which gave me a good risk to reward, as opposed to, a 30 to 40 pip loss, okay, if I would have entered where structure was broken. All right, very important. It's going to maintain your account over time. All right, we're not just trying to be profitable, in a week, with months and months and years. We want to maintain profitability. All right. So trust me, one loss ain't gonna stop no show. Okay. So as you see, as I'm going, so that the last number three would be it dipping into that fair value gap, which it did here. Now, you don't have to wait for a pullback. You don't got to wait for it to go all the way down here. Just you can strike immediately. You can strike immediately. And if you would have struck here, struck if you were struck here at the top of it with your stop loss underneath the low, all right, you're talking about 11 pips. 11 pips. All right, and then your first take profit will be 20 pips. So excuse me, that's about a 1 to 2. And then, and as you know, it went up all the way 100 pips. Excuse me. I got a little allergies. Sorry, guys. But as I always do, I always zoom out to check for buy side liquidity, because those would be the targets. So I go to the higher time frame just to check out buy side liquidity, and then we have it right here. All right, so this would have been that next target here, which is 73 pips away, and then the next target here. Boom. 90 pips. So, honestly, I probably wouldn't have went any further, but like just for, argument's sake. Okay, it even took out this one. It even took out see, price has targets, man. It has targets. So this is I showed you how to get into the trade. Now I lost that trade today. Um, but and I showed you why I got into my setup. I also showed you the proper setup. I saw my setup. I got into it. I ignored the other direction. So it is what it is. But once you would have got into this trade, you target buy side liquidity, being that you're going for buys. It swept the sell side liquidity, right? Then your first target would be the first area of buy side. Boom, second area right here. Here's a third area right here, a fourth area here. All right. If you want to get nasty, boom, here's another area. And as price is going, hitting these targets, you want to be taking partials. All right. And it's even better you taking partials and leaving a little something on the line so you can take advantage in case the price goes crazy. I know you've seen, like, those news reports where price runs 900 pips, 1,000 pips. All right, it doesn't happen every day, but it's not uncommon. All right, so just to be able to take advantage of that, leave a little something on the table so you can. All right. So yeah, man, that was my trade today. I just want to go over it. I'll do this more often. Um, Thank you guys. Thanks for hanging around. All right.